I have some information on a gap down as well as a gap up. They happen to be, the information happens to be side by side in the in this example that I'm going to show you, and we'll talk a little bit about what we see here. In this particular example, let me take and I'll move this vertical line over to the gap day. So the pink vertical line is on the day before the gap, I should say. And so we're looking at this particular situation, and we're trying to determine what we see in the way of a gap. We look at our proximity group, and we see that all of our indicators are real near the zero line. Your power four, your pink, blue, yellow, and white are the ones that we're most interested in. And when we do have gaps, we typically see power Zion divergent to the other four, to the power four. Now, this in many ways, this qualifies as a standard gap situation. If you look over here in the box, you see power green at 0.0289 and power orange at 0.0213. So you have an extremely small distance between the two. I mean 0.007 or 8 or whatever. So that is really tiny, and that's what we need, that tiny spread difference in the between power green and power orange to be one of the key elements before we see a gap. We look at this thing and we can tell by over here in the zip chart that zip Zion is highest, which tells us that next day we're going down. We also see some in the start of a pink-green bottom, which is the signal for price going up. But we can also tell from that zip pink is at 10.9 with zip green at 0. And most of the time, when pink, the rule for a pink-green bottom is that zip pink must be next to zip green to go up, and that's the vast majority of times that's the situation that you will find. It also is normally under 1. It's like 0.4 or 0.1 or whatever it might be. And so when it's at 10, even when it's at, I mean, it can go up in 3 and 4 if in particular situations, but when it's at 10, the probability is that it's going to go down the next day. Now, what the things that I just shared with us here are some contributing factors. We're not looking at the pink-green bottom as a factor in going up, because that's actually an opposite pattern. But we are, I wanted to share that information about the pink-green bottom because it just contributes with zip green at 0. It's just telling us that there's a lot of people leaving the market, or leaving the stock, excuse me. When we go over here to the power chart, we see that the power, I'm going to move this, that the power on this vertical green line day, the power chart has, oops, I need to move this back to a little bit. There we go. The power chart has the pink at minus 0.07, the white at minus 0.02, the Zion at minus 0.08, and the blue at minus 0.09. And yellow is just above 0, and all the rest are under 0. And so that could be indicative. Well, I hesitate to bring this up because it might cause confusion, but that could be indicative of what you might perceive to be one of the 3 patterns in a gap up. But again, that is absolutely not the case because of what's in the trend chart. The other factor is that normally when you look at a gap up, for example, like over here, where the vertical line is right here, right now, in the power chart, you have the opposite. You have power Zion up and the power 4 down. We like to see that configuration. We like to, for an uptrend. For a gap up, in that the power Zion is divergent with the power 4. However, there's 2 problems. We normally only want to deal with 1 days of divergence. When you move this over for a second day of divergence, then you've got 2 days, and then you've got mixed signals in the power 4, which then just creates issues. But moving that line back, we're looking at that 1 day where, hey, power green and power orange are not that far apart. Looks like they're 0.03 to 0.00. So, it falls within the realm of the green being close enough to orange to be up there. But in this particular case, the power 4 that you're looking at are not on the left side of the peak. In other words, you need to be looking for an uptrend over here. See, all your 4 indicators solve the problem of an uptrend in the proximity group. Your 4 power lines are up and your zip line is down. You can see that clearly, or hopefully you can see that clearly right here. Your zip line, your power Zion is down, and your 4 power lines are up, and they are before the peak. That's potentially, if you had some down touches, that's potentially an uptrend. And we do have some down touches. In this case here, gray has down touched the pink, and then the red and the green are up higher. And I'll share with you, trend red is at 20 and trend green is at 10. That's a big separation. When red is much higher than green, then you get a stronger up movement. In this case, in an uptrend, with your proximity group right here, with a downtrend here, with the trend gray down touching the pink. And keep in mind, trend gray is the weakest of the 3. We like to see trend red or trend green down touch, but we do have a strong separation between the red and the green, which gives us a nice green candle the next day. But we don't, over here, I wanted to run through this explanation so just to tell you that you have to be looking, you can't be looking at the power 4 on the downside of a peak. You have to be looking at it before the peak occurs, because that's what the gap up is all about. Now, back to the gap down. On the gap down, we have several key things. We have several key things on this day that tell us it's going to be a strong movement down. It's not necessarily possible to say that it couldn't be equal to the previous close, open equal, and then go down. But the gap is the stuff is pretty much there. Again, the power orange and the power green are 0.01 apart, and green in this case is above orange. But the key element is right here. Trend red and green and gray are all under, not sure if you can see this, they are all down and under green, under the trio, blue, pink, and yellow. They're also all under 0. And this helps a lot too if you look at trend red, which is at -26, and trend green is at 9. So in that over here, I had a 10 spread difference when I looked at the two. Red was higher than green, and we had a really nice green candle. Over here, trend red is at -26 and green at 9. So that, that makes it 17 points apart. And they're under 0. That's a real strong indication for going down. And all your power lines have moved negative, or most except for yellow, all your power lines have moved underneath the 0, and you have the contributing factors of the ZIP Zion going down and being the highest. For a gap, you have 1 day up and 2 days down, which is a 2-day TOC pattern, which is one of the patterns that's listed as a possible gap down pattern in the color codes and the other information that you can identify with gaps down. So that's some brief information about how gaps, how you can read the gaps signals for either way. They need to be in the right place. They need to be in the right setup. And obviously, in the way of a gap, you have to have identical indicators, down touches, and the proximity group in its proper place. I will comment also that the proximity group can be under or over 0, or under or over the green and green and orange line, but you don't want to be on the back side of a peak, because sometimes I haven't had a chance to explain that on some of the other videos, simply because the situation didn't lend itself to that. But but those are key elements to understanding how gaps move and what constitutes the conditions of a gap in this 3-gap pattern analysis that we use as our primary formula for finding gaps. So hope that made a lot of sense. I hope it wasn't confusing for you. I debated on whether to do a gap up and a gap down in the same video, but that's it.